Question 1. A manufacturing company in Baltimore seeks coverage for potential loss due to fire. The insurer explains that the premium is determined based on data from hundreds of similar businesses. The company questions how this data ensures fair pricing and accurate risk assessment. What concept is being applied to support the insurer's pricing model? A. The law of large numbers. B. The doctrine of proximate cause. C. Risk avoidance strategy. D. Conditional reciprocation. Answer. Correct answer A. The law of large numbers. Explanation. The law of large numbers enables insurers to predict future losses more accurately by analyzing data across many similar exposure units. This reduces uncertainty and stabilizes premium rates in Maryland and across the U.S. This statistical principle underpins risk classification in underwriting. It is not about causation B, nor about avoiding risk C, and has no relation to contractual reciprocation D. Reference NAIP model laws and mere underwriting guidelines. Question 2. When evaluating the merits of insurable interest, which of the following best explains why an employee may not insure their employer's commercial building? A. The risk is speculative. B. The employee lacks financial interest in the property. C. It violates the principle of indemnity. D. Only owners can obtain commercial policies. Answer. Correct answer B. The employee lacks a financial interest in the property. Explanation. Under Maryland law and general insurance principles, one must have a financial stake in the subject property to demonstrate insurable interest. An employee, unless contractually liable, does not suffer direct financial loss from damage to the employer's property. A is incorrect. Risk type is not the issue. C is misleading. The principle of indemnity is about restoring loss. D is overly restrictive. A tenant's lien holders and others can have insurable interest. Question 3. Given the circumstances, Isa Daniels, a commercial insurance producer, submits a binder to cover a client's new warehouse, but forgets to inform the client about the binder's expiration. Fire damages the property one day after the binder expires. The client claims coverage should still apply. What principle is at risk in this situation? A. Good faith. B. Warranty. C. Utmost transparency. D. Waiver and estoppel. Answer. Correct answer A. Good faith. Explanation. Insurance contracts operate under the principle of uberimi fide, utmost good faith. Producers in Maryland have a fiduciary duty to disclose all material facts, including the terms and expiration of binders. Failure to inform the client breached this principle, exposing both ethical and legal risks. B and C are narrower concepts. D applies only when an insurer waives a right and stopped from denying it. Question 4. In contrast to coverage under the standard CGL policy, which scenario would most likely trigger the product's completed operations hazard? A. A customer slips inside a bakery while ordering. B. A contractor's completed staircase collapses month after construction. C. An employee drops heavy item on client during delivery. D. Fire damages the business premises due to faulty wiring. Answer. Correct answer B. A contractor's completed staircase collapses month after construction. Explanation. Products completed operations liability covers damages resulting from businesses' completed work or sold product after they've left the premises. Maryland CGL policies define this under coverage. A and C involve premises or operational liability. D is property damage, not third-party liability from completed operations. Question 5. From the perspective of ethical sales practices, which of the following actions by a Maryland commercial lines producer would most likely constitute twisting? A. Recommending policy with more relevant endorsements. B. Falsely claiming competitors' policy excludes coverage it does include. C. Not disclosing that coverage is through surplus lines insurer. D. Collecting the premium before providing disclosure. Answer. Correct answer B. Falsely claiming a competitor's policy excludes coverage it does include. Explanation. Under Maryland Code SS 27212, twisting involves making false or misleading statements to induce policy replacement. It's an unfair trade practice. A is acceptable if it's in the client's interest. C relates to surplus lines disclosure laws but isn't twisting. D may be procedural misconduct but not twisting specifically. Question 6. Through careful analysis of Istalow's insurance claim, it is discovered that his policy contains coinsurance clause requiring 80% coverage of property value. At the time of the loss, his coverage was only at 50% of the value. How will this affect his claim payment? A. He receives full payment due to partial loss. B. His claim will be reduced proportionally. C. Coinsurance only applies to liability policies. D. He will be denied any payment under the policy. Answer. Correct answer. B. His claim will be reduced proportionally. An explanation. Coinsurance clauses require policyholders to insure property at a specified percentage of value, commonly 80%. If underinsured, as in this case, a penalty applies. Claim payment equals amount carried required amount x loss text. Claim payment equals left frac text amount carried text required amount right times text loss. Claim payment equals amount carried x loss. This encourages proper coverage. Maryland follows this standard per ISO commercial forms. A, C, and D misunderstand the clause's mechanics. Question 7. In a modern context of cybersecurity threats, a mid-sized tech firm in Bethesda experiences a ransomware attack. They seek reimbursement under their general liability policy. The claim is denied. What coverage would have been more appropriate for this risk? A. Business income insurance. B. Commercial property insurance. C. Cyber liability insurance. D. Inland marine coverage. Answer. Correct answer. C. Cyber liability insurance. Explanation. Cyber liability insurance specifically addresses data breaches, ransomware, and digital extortion. Risks excluded under standard CGL or commercial property policies. Maryland insurers typically require endorsement or standalone cyber policies. A may address lost income but not breach response. D applies to mobile equipment or goods in transit. Question 8. Demonstrated by the collapse of a newly constructed roof, which provision in a commercial property policy could limit the policyholder's recovery if the building was vacant for 70 days prior to the loss? A. Vacancy clause. B. Debris removal provision. C. Legal liability clause. D. Extra expense coverage. Answer. Correct answer. A. Vacancy clause. Explanation. Most commercial property policies, including Maryland forms, reduce or exclude coverage if a building is vacant beyond 60 consecutive days. Structural losses like collapse are often excluded under the vacancy clause unless explicitly endorsed. B, C, and D refer to unrelated or additional provisions. Question 9. When presented with a commercial auto policy, the insured realizes they misunderstood the specified causes of loss provision. Which of the following perils is not covered under this provision? A. Theft. B. Vandalism. C. Hail. D. Earthquake. Answer. Correct answer. B. Vandalism. Explanation. Specified causes of loss in the business auto policy BAP include perils like fire, lightning, explosion, theft, windstorm, hail, and earthquake, but not vandalism. For vandalism coverage, comprehensive physical damage coverage is required. Maryland follows standard ISO forms unless customized by endorsement. Question 10. The most significant aspect of the doctrine of adhesion in commercial insurance contracts is A. It ensures equal bargaining power between insurer and policyholder. B. It allows policyholders to modify terms before signing. C. It obligates the insurer to draft clear and unambiguous language. D. Restricts claim payments to actual cash value only. Answer. Correct answer. C. It obligates the insurer to draft clear and unambiguous language. Explanation. Adhesion contracts are drafted solely by one party insurer with no negotiation. Therefore, courts interpret any ambiguity in favor of the insured. This principle is widely accepted in Maryland's insurance jurisprudence. A and B are false. The insured lacks bargaining power. D refers to valuation, not contract principle. Question 11. Examining the consequences of underinsurance, a commercial client, Is Garcia, insures her Baltimore warehouse of $400,000. Its replacement value is $1 million, and the policy has an 80% coinsurance clause. A fire causes $200,000 in damages. The insurer calculates the payout using coinsurance. What will Is Garcia receive? A. $100,000. B. $160,000. C. $200,000. D. $320,000. Answer. Correct answer B. $160,000. Explanation. Coinsurance penalty applies as follows. 400,800,000 x equals 160,000 left frac 400,000 800,000 right times 200,000 equals 160,000 800 billion 400,000 x equals 160,000. She only insured 50% of the required $100,000, 80% of $1 million, so her claim is reduced. Maryland follows ISO coinsurance provisions, and underinsurance can significantly reduce payouts. Full payout only applies if minimum insurance is met. Question 12. By evaluating Istokava's situation, policyholder seeks coverage under his CGL policy after facing claim related to defective workmanship that caused no bodily injury or property damage. What is the insurer most likely to do? A. Pay the claim under coverage. B. Deny the claim under expected injury exclusion. C. Deny the claim due to damage to your work exclusion. D. Pay the claim under products completed operations. Answer. Correct answer C. Deny the claim due to damage to your work exclusion. Explanation. Under Maryland and our CGL forms, the damage to your work exclusion applies when faulty workmanship causes damage to the insured's own work but not to others' property. No bodily injury or external property damage exists, so there's no triggering event under coverage or B. Question 13. Based on the information provided, is Tanaka's auto parts business was burglarized. Thieves stole inventory and cash from locked safe. Her commercial property policy includes the broad form causes of loss but no crime endorsements. What part of the loss is likely covered? A. Inventory only. B. Cash only. C. Both inventory and cash. D. Neither inventory nor cash. Answer. Correct answer A. Inventory only. Explanation. Broad form covers theft of business personal property but excludes money and securities unless endorsed with crime insurance. Maryland-specific commercial policies follow ISO forms, which define theft but exclude theft of currency unless crime forms are added. Question 14. In light of recent developments, Ista Hassan, a newly licensed Maryland producer, accepts a commission from an insurer and rebates a portion of it to the insured as a thank you gift. Which regulation is he most likely violating? A. Misrepresentation. B. Rebidding. C. Twisting. D. Unfair discrimination. Answer. Correct answer B. Rebidding. Explanation. Under Maryland Insurance Code SS 27210, rebating occurs when producer gives back part of their commission or other valuable consideration as an inducement. It's prohibited unfair trade practice even if disclosed. Gifts, unless nominal and allowed by regulation, are unlawful inducements. Question 15. Throughout the course of policy review, a client asks about coverage gaps. They are particularly worried about losses stemming from ordinance changes after fire. What optional commercial property endorsement best addresses this concern? A. Inflation guard. B. Law and ordinance coverage. C. Peak season endorsement. D. Debris removal coverage. Answer. Correct answer B. Law and ordinance coverage. Explanation. This endorsement covers increased costs due to building codes after a loss. Standard commercial property policies exclude upgrades or demolition costs required by law unless this coverage is endorsed. Maryland carriers often offer this under building ordinance endorsements in line with local code compliance. Question 16. To determine whether a Maryland employer's liability policy must respond, consider this. An employee is injured on the job but files civil suit alleging gross negligence. Which coverage addresses this legal action? A. Statutory workers' compensation. B. Commercial general liability. C. Employer's liability insurance. D. Directors and officers' liability. Answer. Correct answer C. Employer's liability insurance. Explanation. Employer's liability, Part 2 of the workers' compensation policy, covers suits filed outside the exclusive remedy of workers' comp. If gross negligence or third-party overactions occur, this coverage responds. A. Only pays medical wage loss. B and D don't apply to employer-employee relationships. Question 17. As a result of reviewing the policy terms, a client discovers their inland marine coverage is insufficient for protecting tools being moved between job sites. What coverage would better address this exposure? A. Installation floater. B. Builder's risk. C. Equipment breakdown. D. Bailey's customer coverage. Answer. Correct answer A. Installation floater. Explanation. Installation floaters cover materials, supplies, and equipment during transport, installation, or while awaiting installation. Maryland follows ISO forms for inland marine, and this floater is appropriate for mobile construction equipment not fixed at a job site. B is for the building, C for internal mechanical failures, and D for goods of others. Question 18. Upon closer examination of commercial general liability forms, which of the following would not be covered under the coverage? C. Medical payments section. A. A visitor trips on a wet floor in the lobby. B. An employee slips and breaks an ankle on the loading dock. C. A vendor cuts their hand while unpacking a shipment. D. A passerby is injured by falling signage. Answer. Correct answer B. An employee slips and breaks an ankle on the loading dock. Explanation. Coverage C under CGL excludes employee injuries, which are addressed under workers' compensation. Medical payments coverage is no fault and designed for third parties. Maryland follows ISO form exclusions strictly. A, C, and D are typical covered situations. Question 19. The traditional approach to rating workers' compensation premiums considers multiple factors. Which factor does not directly affect premium calculation? A. Classification of job duties. B. Employer's prior claims history. C. Size of the covered payroll. D. Employee's marital status. Answer. Correct answer. D. Employee's marital status. Explanation. Premiums are based on payroll, job classification, and experience modification. Claims history. Marital status has no relevance in rating under NCCI or Maryland-specific rules. This ensures fairness and reflects actual exposure risk. Question 20. At the advent of professional service lawsuits, a marketing consultancy seeks protection from claims related to alleged negligent advice. Which commercial policy form best meets this need? A. Business owner's policy, BOP. B. Commercial general liability. C. Errors and omissions liability. D. Employment practices liability. Answer. Correct answer C. Errors and omissions liability. Explanation. EO covers liability from professional services, such as giving incorrect marketing or financial advice. CGL excludes these services under professional exclusions. Maryland producers must recommend specialized liability forms like EO for consulting and service-based firms. Question 21. Considering the evidence Mr. Patel operates a commercial trucking company in Maryland, his business auto policy excludes coverage for pollutants spilled during transport. After an accident causes a chemical spill, what type of endorsement or separate policy should he consider to address this exposure? A. Garage keeper's liability. B. Motor carrier pollution liability. C. Commercial umbrella liability. D. Inland marine floater. Answer. Correct answer B. Motor carrier pollution liability. Explanation. Pollution caused by transport vehicles is typically excluded under standard business auto policies. Maryland commercial truckers often add motor carrier pollution liability endorsements or separate policies to cover cleanup and third-party claims arising from pollutant spills. Garage keepers A. Covers vehicles left in care. Umbrella C. Excess liability and inland marine. D. Property in transit. Question 22. During the process of underwriting, a Maryland insurer discovers that a business owner deliberately withheld information about prior fire damage to a commercial property. What consequence is most consistent with principles of representations, warranties, and concealment? A. Policy is rescinded due to concealment. B. Claim is paid but premium increased. C. Coverage is limited to partial loss. D. Insurer waives right to deny coverage. Answer. Correct answer A. Policy is rescinded due to concealment. Explanation. Concealment of material facts such as prior fire damage in Maryland allows insurers to void a contract ab initio if the misrepresentation is intentional and material. Rescission means the contract is treated as if never issued. B, C, and D are not consistent with the principle of utmost good faith in Maryland law, mere regulations. Question 23. Taking into account Maryland Insurance Administration's regulatory framework, which action by commercial lines producer would be considered an unfair trade practice? A. Disclosing full policy terms to clients. B. Misrepresenting competitors' policy benefits. C. Submitting applications with complete and accurate information. D. Providing education about policy coverage. Answer. Correct answer. B. Misrepresenting a competitor's policy benefits. Explanation. Maryland Insurance Code SS27212 explicitly prohibits misrepresentation or false advertising of competing policies as unfair trade practices. This includes exaggerating or falsifying policy terms to sway clients. A, C, and D represent ethical, lawful conduct expected of producers. Question 24. With respect to claims handling under Maryland commercial policies, what is the insurer's primary obligation under the duties in the event of loss condition? A. Pay claims immediately without investigation. B. Conduct thorough investigation promptly. C. Deny all claims not submitted within 30 days. D. Accept liability regardless of policy terms. Answer. Correct answer. B. Conduct a thorough investigation promptly. Explanation. Maryland regulations require insurers to investigate claims in good faith and within a reasonable time frame to determine coverage and damages. Immediate payment without investigation. A. Is impractical. Denial without review. C. Violates fair claims practices. D. Contradicts contract terms and legal obligations. Question 25. Given the circumstances, a Maryland business insured under BOP experiences business income loss after a covered peril. Which additional coverage helps reduce exposure to inflation-related increases in payroll and expenses during prolonged restoration? A. Inflation guard. B. Spoilage coverage. C. Ordinance or law coverage. D. Extra expense coverage. Answer. Correct answer. A. Inflation guard. Explanation. Inflation guard automatically increases coverage limits over time to account for inflation, including payroll and expenses related to business income. Maryland BOP policies often include this endorsement or built-in provision. Spoilage, B, and ordinance, C, are unrelated to business income. Extra expense, D, is additional but not inflation adjusted. Question 26. When faced with a liability claim arising from a subcontractor's faulty installation work causing third-party property damage, which of the following best describes the role of commercial umbrella liability policy? A. It replaces the subcontractor's general liability. B. It provides excess coverage above underlying policies. C. It excludes subcontractor-related losses entirely. D. It provides first dollar coverage without limits. Answer. Correct answer. B. It provides excess coverage above underlying policies. Explanation. Maryland commercial umbrella policies provide additional limits beyond underlying primary liability policies, including subcontractor claims if covered by underlying insurance. They don't replace primary policies. They exclude subcontractors. C. Nor offer first dollar coverage. D. Question 27. Throughout the course of a premium audit, a Maryland insurer notices that a policyholder misclassified employees with high-risk job codes as low risk. What is the most likely result? A. No change due to producer error. B. Premium surcharge or adjustment. C. Automatic cancellation of the policy. D. Denial of all claims filed. Answer. Correct answer. B. Premium surcharge or adjustment. Explanation. Misclassification typically leads to an audit adjustment or surcharge reflecting true exposure. Maryland law mandates premium adjustments to reflect accurate risk, protecting insurer solvency and fairness. Cancellation, C, is possible but rare unless intentional fraud is proven. Denial of claims, D, is unrelated to premium audits. Question 20. Several experts suggest that under Maryland law, the assignment provision in commercial insurance contracts, A, allows insureds to transfer policies freely without insurer consent. B. Requires insurer approval before assignment. C. Void the policy if assigned. D. Applies only to property policies, not liability. Answer. Correct answer. B. Requires insurer approval before assignment. Explanation. Most commercial policies, including Maryland forms, require insurer consent for assignment to prevent unapproved risk transfer. Unauthorized assignments may void coverage. A is incorrect as free assignment is generally prohibited. C and D misunderstand assignment applicability. Question 29. From a practical standpoint, how does the subrogation clause benefit the insurer after paying claim? A. It allows insurer to recover losses from third party at fault. B. It requires insured to pay deductible before claim. C. It excludes losses caused by negligence. D. It doubles the amount payable to the insured. Answer. Correct answer. A. It allows insurer to recover losses from a third party at fault. Explanation. Subrogation allows insurers, after indemnifying insureds, to pursue recovery from responsible third parties, minimizing insurer losses and controlling premium costs. It does not require deductible payment. B. Exclude negligence. C. Or increase insured payouts. D. Maryland courts uphold this principle firmly. Question 30. One might argue that the recurrence form, a CGL policy, offers broader protection than the claims made form because it covers incidents regardless of when claims are filed. B. It requires claim reporting within the policy period. C. It excludes coverage for bodily injury. D. It limits coverage to professional liability. Answer. Correct answer. A. It covers incidents regardless of when claims are filed. Explanation. Occurrence policies cover injuries or damages that occur during the policy period, even if the claim arises years later. Claims made requires claims be reported during the policy period or extended reporting period. B applies to claims made policies. C and D are incorrect and unrelated.